I'd like to introduce you to my good friend, Sam, the aesthetic accountant. And we met years and years ago when I think we were both first just started speaking, and I was sitting at the back going, I'm scared, and Sam's going, I'm scared too. And then we both went up and smashed it. So I'm delighted to welcome to, hopefully she's going to make tax exciting. Woo! Right.
So I'm Sam, and I founded something called the Aesthetics Accountant because I could see a gap in the market for somebody who actually knew the industry, not tax and VAT, but actually someone that could put the knowledge about skincare and medical treatments into the legalities of VAT and tax. And what I wanted to talk to you guys about today is something called Making Tax Digital, which I don't know if has anyone heard about MTD or Making Tax Digital? So it's HMRC's way of it's already here for VAT. So if you haven't hit the VAT threshold, you might not be aware of what MTD is. And it's HMRC's and the government's way of controlling you, basically, because they want to know what is happening in real time. When you're working at the NHS, for example, and you're getting a payroll and a pay slip, that information is already going in real time to HMRC. And what they hope to do by introducing Making Tax Digital to personal tax and corporate tax a bit later on down the line is, so again, they've got this information in real time, so they can close the gap between what tax you're supposed to be paying and what tax people actually pay. The only benefit at the moment that this will have to you, and what we're going to talk about today, is getting you on the software. So even if this doesn't apply to you at the moment, and you're not so much worried about MTD, getting on the software sooner rather than later has its actual benefits, where you can actually know your numbers, you can forecast ahead, do a lot of planning, and that is the benefit of software. MTDs for the government, it is so they can watch what you are spending, what you're doing, and if you're paying the right tax. So is anybody in here, how does everyone keep the records for accounts at the moment? Are you on spreadsheets or paper copies or software? On what, sorry? Software. Which software are you using? Xero, yeah, okay. Yeah. Is anybody else still using spreadsheets?
Yeah. Spreadsheets only because of my 16 years that I've had a bookkeeper like that, but she's now retiring, so I'm going to Xero, so I'm interested.
Yeah.
We're going to get all that over to Xero.
It should. The problem with the spreadsheets is this whole system is to eliminate spreadsheets and to make sure that everything has got a digital link. Some of the stuff that I'm saying won't go sliding with the slides. So the idea of the software and why HMRC wants you on the software is so that every single transaction that you make has a digital link, and that's the point of getting on the software. Spreadsheets are ideal if you're like me and you like a spreadsheet to track your own KPIs and what's coming in, what's coming out. I still like a spreadsheet, even though we can't use them for accounts. I still love a spreadsheet. So where this comes in for medical clinics, how many of you are sole traders and how many of you are limited companies? Limited. Yeah, you're sole trader. Yeah, limited. So it's half and half, really. So sole traders, this is coming into effect from April 2026. So from April onwards, you will need to, instead of submitting your yearly tax return, we are now submitting it quarterly. So your relationship with your bookkeeper, your accountant, the software you're using will change, because it'll go from adding everything up at the end of the year and submitting it once. We're now submitting it throughout the quarter. Throughout the year into separate quarters, which means it's 5 times the work, because at the end of the year, we still have to do the yearly tax return and tie it all together. So if you've got various income streams, so for example, if you're a sole trader, and you might rent a property out, or you might still have an income from the NHS, or you might be taking dividends from a company, you're going to declare the sole trader income and then quarterly, as well as any income from properties, but you're not going to declare your dividends until the end of the year. So it's HMRC's way of simplifying it, but also making it ridiculously pointless. But yeah.
So if you're a sole trader in your aesthetics business, but you're still working in the NHS, salary coming to that 50,000.
Not until the end.
From being a sole trader.
This is where it gets complicated in HMR, and this is why it's best to plan ahead. So at the end, we then put in what would be your NHS salary. HMRC should have that in real time every month, and then you declare every quarter your sole trader income. And then at the end of the year, it all comes together. Which, if how HMRC works, it won't be easy. And it's another way that every quarter, there's a way that they can get penalties out of you if it's not late, if it's not accurate. The one thing that we look at with my clients is we plan long term. So when I take on a client, I want to know, do you want holidays? Do you want a mortgage? Because it's not just the most tax efficient way to extract money out of your business. We need to know what your personal life is. So if you've declared everything every quarter and you get to the end of the year and it's like, oh no, it's put me in a position where this isn't the long-term plan. That's why I'd work with an accountant who plans ahead, because once you've submitted those quarters, if there's any kind of mistakes in there or things that don't tie up to the year end, they are going to start penalising you, as they do if you get a late self-assessment. So from HMRC's point of view, it is another revenue stream from them in penalties and interest. So if there's any errors anyway with HMRC, you don't. So say, for example, as it is now, and if you submitted a tax return yearly and it was incorrect, you'd still get a penalty because you'd have to go back and redo it. If the payment was late, so say if it comes to January 31st and you've submitted your tax return and there's an error on there and you have to go back and correct it, you'd still get a penalty and interest for that payment of tax that you pay being late, because even though you've identified it's wrong, it will still incur a penalty. When it's submitted quarterly like this, and then you get to the end of the year, if there's any mistakes in here, your fifth one is to sort it out. However, it's really hard to explain. So if these quarters have got a huge amount of errors in them, then that's when they'll penalise you. But a lot of this system at the moment with HMRC isn't clear. We're only going on the information that we've got at the moment. But if there's a way they can penalise you, they will. And that's this is what HMRC have to make like extra revenues for them. It's a lot of what we'll see with our clients is our clients will get letters through the door saying you've been penalised for this, you've got a late submission for this, late submission for that, you've got penalty points for your VAT. Half of them are just sent out generically, and a lot of people will just pay them because they think, oh, HMRC know what they're doing, pay this penalty. Half the time it's wrong. And that's why and they'll send that letter out a few times, even when we've appealed it, it'll still be wrong, but that's how they make their money. They shouldn't do, but don't trust what they're saying. This is why it's always better to plan ahead, know what your numbers are and be on the software so you know what you're submitting, and then you're not getting to the end of the year and there are errors on it. Because a lot of planning that we do needs to be done before you even start this year, because if not, and then one of the things I would suggest at this point, if you are a sole trader, this is coming in for sole traders from April 2026. There's not a lot of difference between sole traders and limited companies anymore because of how the budget is and what's happening in the UK at the moment. If you're thinking of becoming a limited company, I would do it sooner rather than later, because this is going to buy you a couple of years before you have to do this. However, I can't give tax advice, so I can't say be a limited company without seeing your figures, but this will buy you a couple of years before you have to start submitting everything quarterly. If you're at the VAT threshold, you will already be submitting your returns quarterly, and having that foundation in place will help you with this, and then when it comes in for limited companies as well. It's just about planning ahead. So these are the different thresholds of the timeline that HMRC are going to implement this. So from April 2026, it's personal incomes over 50,000. The catch here is that's gross income, and it includes your income from any properties, income from your sole trader business. That's before expenses have been taken out, so it's the top figure, not the bottom figure. And then every year thereafter, the thresholds drop. So it's those that are earning lower money have got 2 to 3 years before they need to follow these rules. And then the key requirements at the moment is to make sure that you are, hold on to digital records in days. Yeah, so we've kind of covered that in what I've already been saying, sorry. So we are going to be doing the quarterly updates. It is ideal that you are on software, and the annual final declaration is just what a tax return would have been at the end of the year. That's just what they're formally calling it now. The software, again, come away from the Excel spreadsheets. There's no reason why you can't keep your old cash book on there, that's fine. However, from accounts point of view, you need digital records. And obviously Xero is on that list. I'm not a fan of Xero because I don't find it works in the aesthetics industry, but that's my personal opinion. It's the same with you guys having fillers that you prefer and products that you prefer over other products. That's just me being an accountant. We use Sage Business Cloud. QuickBooks, just stay away from QuickBooks because it will end up being more problematic than Yeah, and you'll have to pay someone to fix it. Xero is good. Pardon?
What did you say about QuickBooks?
It's we call it shite books in the industry, if you want my honest opinion. It's aimed at the end. It is aimed at the end user, but the problems that will happen in QuickBooks is the way it links to your bank. You'll spend more time fixing it and unpicking it from an accountant's point of view. So if someone's been on QuickBooks for a couple of years, the first job we do is we have to unpick it all, and you'll pay more for an accountant or a bookkeeper to do that. Sage, I am biased towards Sage because it is a brilliant product, and the reason Sage works so well with aesthetics is because the double entry is in the front and not the back. Xero, we have another really rude name for that in the industry. But one of the good things about Xero is if you're not splitting the medical and cosmetic VAT, then that's brilliant. Xero is good because it also links with things like aesthetic nurse software, a lot of the like Paboo and people, you can extract the data quite quickly into Xero. Sage and auto entry, any of the CRM systems that you're using for your patients as well will go into auto entry and into Sage. Xero and QuickBooks both use auto entry as well. And what auto entry is, which if you don't have any product, I'd get auto entry. If you imagine it being like a digital shoebox, so in the olden days where you'd get your receipt. So if you, like today, if you've travelled here today, your train tickets, the meals that you're eating, anything that you buy today is all allowable expenses, and you'll get a receipt. What auto entry does is snap that, and you just have it on your phone, snap it as you go along, and it feeds into your software. And that's the digital link that HMRC are wanting to say, the digital link from you buying something. And that, if you get into those habits now, not just for MTD, but when you do hit the VAT threshold on your first, I know we're going into VAT, so I'm sorry, it's a bit different, but when you do your first VAT return, you can go back 4 years for certain criteria that's eligible to claim back VAT on. So if you've got in this habit and you've kept all these receipts that are feeding through, it's really easy to do your first VAT return. So your accountant will spend less time doing your first VAT return and also claw back a lot of VAT that you might not have missed if you didn't have the receipts kept. So I mean, there are other products on the market. There's Free Agent, which if you bank with NatWest, Free Agent has its own software. No, NatWest has its own software called Free Agent. That's good if you stay small. It's more of a very basic product because it's free. But those are the main free ones that are good HMRC software that they want to see you using, and all of which do a lot of free training. We offer training in what we do to bespoke it around the clinics. We do work with all softwares, so you don't have to be on Sage to work with us if you did want to work with us.
Your niche working with like aesthetics clinics and stuff.
Yeah, so we specialise in the medical clinician. Yeah, I only work with medical clinicians now. I did have another practice, but we're solely focusing on medics. We have different. You don't have to be one of our clients to have our software. We have what we call the Aesthetics Accounting Academy. Am I all right talking about Abby? Yeah, is that all right? I don't want to do like a hard sell or anything. So we do have the academy for accounting. So you guys can get set up from the start by using products like Sage and Auto Entry. You don't have to have an accountant for that point. So we offer all those, because what I was finding is that people would go and use the software from the software providers. They wouldn't have a clue about the medical aesthetic industry, specifically the VAT, and they'd end up in a mess when they came to us. So that's why we've got the academy. You can go on, buy the software. You can either buy our time and we'll set it up for you so it works in the background. Any software needs to be able to grow with you in the background, so that as you grow and grow and grow, you'll be surprised how fast medical aesthetic clinics grow. There's no industry like it. So that's why a lot of accountants aren't prepared for that quickness of growth. So we have the academy, just off-the-shelf products. We also have a book that you can buy off Amazon, but if anybody wants it here, we'll happily give a discount. I can put discounts in later. But if there's anything that you need, if you haven't got a foundation for your bookkeeping and accounts, I'll send you the academy, or you can get it from Claire, our academy website, and they're literally off-the-shelf products you can buy from us. And we don't make a markup on our software. Accountants will push QuickBooks and Xero on you because you get a massive referral fee for referring QuickBooks and referring Xero. We don't. We give you Sage for what we pay for Sage and Auto Entry. Yep, so the penalties, there will, HMRC, and this is back to MTD, there's penalties on VAT, payroll. This is the new structure which will be specifically for MTD. We still haven't got the full details of this, but it is, we're looking at the £100 minimum penalty for late filings. So whereas that would be once a year, you'd get your £100 if you missed the January deadline. This is now 4 times a year where you have a potential chance of missing the deadline each quarter and getting a penalty. So HMRC have, got 4 times the much plus the 5th one if you make that one late as well. Additional charges for repeated failures. This is something we've seen with the VAT lately, where there's a new penalty system where it's penalty points, and the more you mess up with the systems, the more HMRC calls you a repetitive failure, and then you get more charges. So yeah, they make you feel brilliant. Yep, and yeah, so that's but this will all be released as we get closer to April. The more the thing is with HMRC, I would start preparing now for MTD, because the thing is with HMRC, when this comes in April, they won't have a clue what they're doing. They still use Windows 7, I think, which I've heard in some of their, which I don't know how much of that's just a myth amongst accountants, but they are so behind in everything they do. But it will go wrong because that's HMRC. Yeah. So the first steps to get you started is obviously assess where you are income-wise and look at the gross income from being a sole trader. If you do rent out properties or you've got any other income streams, that will go in as well. Choose the right software that's right for you. Just because I like Sage doesn't mean that you have to go to Sage. There's Xero's great, QuickBooks not so great, but register for MTD with HMRC. So HMRC are offering sole traders that want to do this before April, so you can have a bit of a practice run. What they will do as well, they'll offer incentives to be on that beta program. It's worth getting on there if you can get on there, and then start maintaining your digital records. Again, auto entry is brilliant for that, and then obviously submit your quarterly updates and your final declaration once we get into April 26 onwards.
But this is only for sole trader.
Only for sole, not for limited yet. No, unless you're limited and you've got another income coming in. But yeah, for limited you're okay for now. But I would recommend getting on the software anyway,
Yeah, for sure.
because not just for the stuff you can do with something like Sage. Say, for example, this week I had a call, somebody wants to assess how much they're spending on Google and Facebook ads. So straight away I can pull that report and tell them, and then I can see how, if the turnovers increase. So if you've excessively spent on marketing, you want to see an increase on your turnover, because then you're not getting a return on investment. So if you've got the right software, it will do that for you. And then when you want to ask these questions with your accountant, they can access your software and actually give you informed answers to your questions rather than just guessing. The reason we do things with the academy is when injectors come to us, you'll be surprised that you'll grow so quickly, and other accountants aren't ready for that, because normally you'd see the growth that you guys make within 6 months to a year. Normal businesses make that in 3 years to 5 years. So when that's the way we set up why we do what we do, because there's no industry like it. And then you've got the complications of the VAT and making sure that needs to be done at foundation level as well, so that you're not feeling that hit when you do become VAT registered. So sorry, I've gone into VAT again. Yeah, and then these are the resources, and Claire's got these slides. So these are where you can get any advice to read more about MTD. HMRC, I would always check that you go to the .gov website whenever looking for anything to do with tax. If you see some TikTokers and some Instagram accountants that are giving tax advice, it's nonsense. They always make it sound really cool and that they're getting you some freebie. It's not. Just everything is on there and you can check it yourselves. And it will. A big one at the moment is putting fancy. There's a TikTok in it, but yeah. That's where you can get all your resources from. I've put Sage on there as well because they're brilliant at their MTD advice, and they've got lots of videos on there that will help you as well. And then obviously see an accountant who can actually set it up and give you ongoing support as well. The reason free agent is a problem is during COVID, when we had everybody doing their tax returns on free agent, which is designed to do, and the end user to do that, when we came to borrow any money for COVID loans for those clients that needed it to sustain COVID, their banks wouldn't even acknowledge their own tax returns because the software. So I lost complete trust in free agent. And I do speak openly about that at accountancy conferences because they shouldn't have done that. So that's why I'd say probably get off it sooner than later, because as you grow, I don't have much confidence in that product. But that's just my personal opinion. And I think free agent works if you're a one-man band and you're a freelancer in IT and you've got your invoices to do, you go on the flat rate VAT scheme and it's just really simple in and out transactions. So yeah, I'd get off it sooner than later, yeah. In this industry, depending on how you're buying your products, if you've got a lot of VAT, the way to look at it is if you're a sole trader and you're getting up to the 90,000, if you're not VAT registered and a lot of and it depends on your patients as well, I would put it off as long as, because if you've got that 90,000, it's 15 grand that you're not handing over. If you've got it priced correctly, when you get to that point, the downside is that in effect, which doesn't feel like this at the time, your patients are then paying that extra 20%. So I would start pricing as though you're VAT registered now, and then put that 1/6, which is how you work out what the VAT is, put that in a savings account. So when you get there, you've already got the buffer, and then anything you claim back, because if you haven't got a lot of VAT to claim on your purchases, you're constantly just paying it and it feels like your money. So it's the best thing to do is get into the mindset that this isn't your money. But I would try and put off being, I think because your business is slightly different, isn't it? Because you're going to claim back a lot on products and a lot on everything that you use. When you're buying Botox, for example, or you're buying on prescriptions, you're not going to be able to have they're going to be zero rated. So you're not going to get a lot of VAT to claim back. Yeah, so when you're buying it in the bulk, and when you're buying it and you can claim the VAT on, but then it is, even so, generally speaking, you want to be having more sales than purchases, don't you? So you're never gonna spend that much on purchase VAT unless you're buying a big massive laser. So if you bought a big massive laser or a piece of equipment, you still got 4 years before you'll still claim that back. So there's no rush to become VAT registered. So say if you bought a 100 grand laser and you hadn't got to the 90 grand threshold yet, you can still have that without paying the VAT over, but you still get the VAT on your laser when you become VAT registered because it's within the 4 years. Does that make sense? And yeah, there's a few other things, but not really relevant to you guys. But stock, we can go back 6 months because of how fast you guys will use the stock. So we can go back 6 months from point of registration for that. And then it's 4 years for big. The way to look at it is what you are using now to generate the money that you're making after the 90,000. That's how they assess it. But I would keep receipts for everything, and a good accountant will go through and get you as much back as they possibly can. And that's only on your first VAT return.
Say you've got a patient who comes in and they have 2 different treatments. One's VAT exempt, one's not. They buy half a dozen products. How does it extract?
So it has to happen in your booking system, because where we break the digital link, which is, so say when I'm dealing with VAT inspections, we don't want to know the patient's details, and that's where I stop them kind of coming out. So this is one of the industries that HMRC will let you have the break in the digital link. So which booking system are you using and moving to? Aesthetic docs, right. So it all needs to be, the medical split needs to be in your booking system, whichever way you extract that information, and then it needs to be in your patient consultation in that booking system so you can extract a report. That report then needs to come, whether it's manually done or in this system, has to be in this system, and then that report is then with the patient's names removed to the point where it can just be medical, cosmetic, zero rated, and that needs to be sent through to your accountant into the digital software that way. So I would move software. If that software isn't doing that particular, you need it in that system, because then the only time HMRC can look at this system is if they come with a warrant. When we have people come out to our clients, we protect all this and we don't want them anywhere near it. And then the reason for that is that they will meet you and they'll be so confident in your answers. Never let them see your patient notes or anything like that. And that's why we have a break in the software and we've got that set up. But does that answer your question? Because the other thing to be mindful of as well is that when you're selling skincare products, if it fits certain criteria, it's not actually medically exempt, it's actually zero rated. So it's about having that in your booking system as well, because if it's zero rated, when you're doing a medical and cosmetic split, we have to do something called a partial exemption. So if you've got a lot more medical, if you imagine it like a seesaw, and if you've got your cosmetic here and your medical here, and if medical's really high, you can't claim back. And if you've got all this products that you've got VAT on, if that's really high, you can't claim back the VAT on those products. But if it's zero rated, which to you guys means the same because it's zero, you're not paying VAT over to HMRC, that is actually treated as cosmetic, and the CISO goes like that, and then you can claim a lot more VAT back. So it's quite a really complicated area of VAT, which is why some accountants will say, right, you're only medical or you're cosmetic, and they won't go through a partial exemption, which is why we're seeing a lot of the investigations come out. There's a lot of myths in the industry currently because of the Sophie Shotter case, and what's happening in the industry is there's a lot of talk that nurses are getting targeted. They aren't. There's a certain postcode which is in Scotland there's a lot of Scottish investigations at the moment, and that is because poor compliance. Yeah, there's a few going on in Scotland because of an accountant that was giving out misinformation. So they are looking at that area specifically, and there's so many myths that are being spread about that if you're a nurse, they're coming for you. If your acne is getting knocked back, it isn't. As long as you've got the patient notes and it's all in your medical notes, then you can rightly give that exemption. And the way to look at it is this is not your tax. This is the patient's tax, and they should be able to have genuine medical health care that's essential without paying VAT on it. So the way we look at it, rather than medical and cosmetic, is it medically essential or medically non-essential? And if it's non-essential, then it's cosmetic, and that's standard rated. And it's about feeling that back to what you're doing and in your systems.